Hello and welcome to our weekly look ahead at the markets here, and just a quick recap. We've obviously had two big central banks meetings in the last week, with the Fed raising rates by 25 basis points and signalling that it may pause in June. The ECB also in action, and it too raised by 25 basis points and signalled that there is likely more to come, but didn't offer much in the way of formal guidance. Both central banks reiterating that inflation remains too high, but they are very much data dependent. So we're going to be looking at what transpires over the coming weeks and months. The US in particular, looking at that banking crisis, we saw some movements in the likes of Western Alliance and PacWest Bancorp last week. Reports flying around that they're going to be looking at selling or some kind of strategic options, shares crumbling as investors flee these mid-size lenders in the US. Also, reports around possible market manipulation to them. The regulators over in the US think that some short-selling attacks on some of these banks amounts to some kind of market manipulation. They're basically piling in against some banks, trying to force them down, and that creates this negative feedback loop of deposit flight, higher funding costs, liquidity problems for those banks, and ultimately the share price collapses, as we saw with First Republic and with that buyout by JPM, where the shareholders were wiped out. So keep your eyes on a potential ban on short selling of financial stocks in the US. It's not out of the realms of possibility. We'll keep an eye on that one. Also keep an eye on what's happening in Washington. On May 9th, the President of the White House will meet with congressional leaders to hammer out some kind of agreement on the debt ceiling. They need to raise that debt ceiling, but there's some disagreement over how much spending cuts are going to need to take place in order to get that agreement through. Data-wise, we are looking at the US inflation data. As we said, the Fed is now very much data dependent, so we're keeping a close eye on the inflation data as always. Last month we saw headline coming down, but core remaining very sticky. It was up 0.4% month over month to 5.6% annually. That stickiness in the core inflation is really what's worrying the central banks, and why they're not signalling that they're just going to stop hiking because the economy is faltering. Bear in mind that the market was pricing in something like a 60% chance that the Fed will cut rates in July. That seems way too optimistic, and we think probably the inflation data will probably see that number come down. And I think the market will need to come around to the idea that the Fed is not going to be cutting rates this year. We're also looking ahead to the Bank of England. It's expected to raise rates by 25 basis points on Thursday. Persistent inflation pressures in the UK, growth not as bad as feared. The PMI, the services PMI last week, signalling pretty healthy growth actually, but also re-emergence of consumer demand driving up inflationary pressures again. So we think the Bank of England will be pushing rates up by another 25 basis points, and may need to do some more yet still. On the earnings front, earnings season is starting to wind down really, but we do have a couple of interesting ones, Palantir, PayPal among them, but also Airbnb is expecting revenues to jump 20% year over year to 1.5 billion. That is after its previous quarter also posted strong recovery in bookings as travel rebounds post-pandemic, and earnings reports from a number of companies last week indicated that it could be a very hot number for Airbnb. We had IAG, Lufthansa and KLM, Air France all signaling a very, very strong summer ahead, flying at something like 97% of capacity of 2019 levels. BA owner IAG also posting a profit in the first quarter of the year, the first time since 2019, and raising its guidance, saying it's going to be at the top end of previous guidance, 2.3 billion euros for the year in terms of profit. We also had very strong numbers from Expedia and Booking, that's the owner of Booking.com. All those pictures of travel remains very, very solid, very strong, and we think that could result in some decent numbers for Airbnb, but we'll keep you posted here. That's it for now. Thanks for watching.